Hello and welcome everyone to the panel, Barriers in Deep Tech Funding and How to Overcome Them. When we talk about building and strengthening the deep tech ecosystem, funding is a significant aspect of it. The funding landscape for deep tech startups is getting interesting by the day, with a host of new funds entering the space and technologies reaching the inflection point. Though the enthusiasm is clearly visible, all is not hunky-dory. Also, deep tech differs from other startups in a way that the technical due diligence has to be done in a different way. The challenges differ due to the very nature of the technologies. Also, the market is wider and the appetite is just being increased in certain geographies. And with COVID hitting us, what has been the impact of it? To find out about this and much more, today we have with us Jatin Desai, who's a managing partner of Inflexor Ventures, Shubham Sandeep, who's principal of Pi Ventures, and Xavier Parkhouse-Parker, who is COO of Cambridge Future Tech. Welcome, gentlemen. Thank you for joining in us today.
Thank you for having us.
Jatin, let's begin with you. I want to ask you, how do funds identify startups developing technologies with significant disruptive potential and which have large global markets early on?
Sure. I mean, the world obviously, even pre-COVID is hungry, for automation, innovation, using technology. And during COVID and post-COVID, obviously, has really acted as a catalyst. As bad as the event was for obviously day-to-day life, I think it has really acted as a further catalyst for some of the industries, more traditional legacy industries that were a bit more resistant to change, and innovation and all that. So obviously, that's the huge backdrop. And just before I answer that directly, right, the way we define deep tech, right, so that that sets the context. For us, any emerging technology or any new or existing technology, even for that matter, that is going to have a deep impact on society going forward is how we define deep tech, right? So for us, deep tech ranges from, all the buzzwords that are commonly used nowadays, AI, ML and AR, VR, Industry 4.0, robotics, blockchain, stuff like that. We also include, space tech and, other things in the whole deep tech space. For us, that is the full umbrella of deep tech, right? And of course, identifying startups in this space, to start with that, usually there are two risks. I'm talking specifically of deep tech and specifically for the India scenario, right? India startup scenario, right? The two of the biggest risks are, one is there is a risk of deep tech startups, which have not thought through commercially. Anyway, it is an emerging thing, right? So that some of these deep tech startups perpetually remain academic projects, right? So it's like projects in the college and all. So I think that is one risk for investors. Obviously, the other risk is scalability. That is, of course, common with any other startup, but a bit more so with deep tech, right? So these are the two things that we try to look for, that these risks are at least minimal, right? When you come in at very early stage, obviously, it's a little bit more hard work and some gut feel as well. So primarily, 3 or 4 metrics that we look for, when we select startups for investing in deep tech space. One is, obviously the founder quality that applies to whether it's deep tech or not. But, 2 or 3 points that specifically look for in deep tech is, one is the level of tech IP, right? So for example, right, nowadays most startups, because these are the buzzwords, like I mentioned earlier, AI, ML, 80% of startups in India that at least I talk to, they claim AI, ML, right? They claim, blockchain, they claim AR, VR, whatever, right? So all aspects, these are the buzzwords. So we actually, before we started the fund, right, we are technologists ourselves. So we have built technology, most of our professional lives. Then me and my partner became serial entrepreneurs. So we have built and sold companies both in US and in India. And then we started angel investments and then we got into fund. So we have had that 360-degree experience. So I think the gut feel, because we have been there, done that, also helps in evaluation. But in terms of the tech IP, see, if you throw money and resources at any problem, right, you can copy it. So there's no really entry barrier as such, right? So we look for 18 to 24 months of a head start, right, for the tech IP that has been created. So if anybody wants to copy, right, it will take that much time. And secondly, either it has to solve a very large India problem, or when you talk about enterprises, right? So SME and consumer, of course, there is no problem in India, right? That's a huge market. Enterprises, of course, are a little bit slower, I would say, in deployment and spending money on such disruptive technologies. Although it has changed in the last 3-4 years. So for enterprise deep tech solutions, we look for global market potential, right? And also that's the difference, right? Consumer SME, at least there's a good domestic market. Enterprise, because even at peak, even at maturity, let's say India matures in that. Personally, at the fund, we don't believe that India will ever exceed 30-35% of the total market share, right, for that particular startup. I think 60-65% of the revenues would still have to come outside of India when you do enterprise startups. So these are things, of course, we look at in terms of evaluation. And then given that we are technologies, we don't take it at face value. We look at tech architecture, we look at tech design. In some cases, believe it or not, we have also looked at the code, right? In some of the startups, just to make sure, it's real, right? So these are some of the things we do. And then, of course, it also comes to domain. So, for example, space tech is not a field that we have experience in. We may know about 60-70% of the overall tech stack, but something like space tech obviously needs deeper sort of domain and commercial evaluation. So in such things, we use, we tap into our network. So for a space tech, we would, get it vetted by, let's say, Indian Institute of Science or IIT aeronautical departments on the academic and the theoretical part. And for the commercial part, we would tap our network for global aerospace companies to see, whether this technology is commercially viable. So stuff like that, right? So that's the overall sort of response to how, Deep Tech Fund would evaluate, startups for scalability and global market potential. Yeah.
Got it, Jatin. I like the fact about due diligence, because that's my next question too. Shubham, based on that, on the same lines, what is the depth of technical due diligence and potential market sizing that needs to be done with deep tech startups vis-a-vis the other startups?
Sure, happy to. So I think from a market sizing perspective, it is mostly, I think, pretty similar. The only caveat here in deep tech startups is because they have somewhat a longer gestation cycle. So you're probably projecting a bit more out into the future. So your variables are a lot less sort of set in stone. So you need to account for those variables when doing the market sizing. Additionally, in terms of the technical due diligence, I think what we've seen here is we've done a space tech investment. We've invested in a mental healthcare chatbot company that can act as your own therapist. Yeah. So from a technical due diligence perspective, I think I agree with Jatin. I think we go into the technical architectures. We do a series of deep dives with the companies, in which it's not structured more as a diligence, but more as a brainstorming session. So both us as well as the founder walk away taking some of the positives from that discussion. What we've seen though is that if you outsource a lot of the discussion, you are hit with an incumbent bias. And especially in deep tech, that is very strong, right? When we go and speak to ISRO scientists, or if you speak to a large pharma company about biotech, they've been working in this space for the better part of 2 or 3 decades. They're used to doing things a certain way. So it's quite common for them to figure out the pitfalls of why things will not work, rather than looking at, if things work, what would be the disruptive potential of this technology. And so what we at Pi are, we are very well known in the sector for our tech deep dives. We have a lot of material out in the open as well. And that's where founders keep referring back to us when they speak to us. But what we do is we form a view internally using first principle thinking. So almost like 80-90% of the thinking is done by the team internally. And then we go out the balance 15-20% where there are obvious gaps. We go out and ask very specific pointed questions. And I think that's worked better for us in truly identifying the really innovative deep tech companies. Otherwise, we feel you might fall into a trap of incremental innovation, what we call, rather than true deep tech innovation.
Got it, Shubham, and good points over there. Let's move to Xavier. Xavier, what are the barriers to deep tech funding vis-a-vis other startups, and what are the actionable points to overcome them? And you have a separate perspective aside from Jatin and Shubham, because you are catering to startups at Cambridge. What do you have to say about it?
Yeah, I mean, it's a really good question. I think both Jatin and Shubham have mentioned quite a few of the challenges in terms of getting deep tech funding into startups. I think Jatin, you mentioned the point about the commercial aspect, and I think this is one of the biggest challenges. And we jokingly call this the Cambridge problem, but I know it's ubiquitous across the sector and at all universities, that academics, especially when they come in and develop a technology, and that technology might be incredible and might have, you know, foundational things, and it might be a lot better than an incremental innovation. But the problem is they get stuck in that research mindset where they're like, well, we'll do this, we can do this, we can do this, we can do 100 different things, instead of focusing on how we get from, you know, zero to turning into a product. And that's one of the biggest challenges faced by a founder of a deep tech or an inventor is actually to nail down what might be that product in the future. It's very much the case when you're looking at biotech's been mentioned, but especially when you're looking at things like materials or electronics, it becomes very, very challenging because there's so much you can do. When it's an AI or an ML-based project, most of the time there's an application in mind, and therefore you're working towards that productization, you're solving that problem. But a lot of the time when you're talking about a material, that has come from research which may have been funded by a grant with a specific purpose. But a lot of the time we're talking about basic research, you know, the old Vannevar Bush idea, and commercializing that, finding that application is really challenging. So I'd say that's one of the biggest challenges I've seen, we see in the space. I think as well, one of the other challenges which is related to this is that when we're talking about funding for deep tech, the cycle for getting from research to getting to product can take 5 years, or, you know, it can take a serious amount of time. And throughout that entire process, you're developing value, you're going up the technology readiness levels, you're getting towards product. But even so, it can take such a long time. So what needs to happen is you need to have investors and investors either directly from the VCs or angels, but also the LPs into funds need to understand that this is patient capital, that you're not going to be expecting an exit within 3 to 5 years, unless that's a tech position. You know, it's just acquiring the technology. So it takes a serious amount of time, and understanding that is really, really important. And I think brings me to my last point on this. It's great to build in great technical teams, and actually technical teams of that early co-founding team, usually that will come from a research group. It probably won't be a professor, but it will usually be someone from that research group that's leading that company as the CTO. Maybe you've got them as chief scientific officer, something like that. But actually finding CEOs, people who have got commercial experience, who are able to sell and communicate the ideas, getting great people like that who understand that this is going to be 5 years or 3 to 5 years to get product into market or to product into customers at all is a really challenging thing. So there's a massive talent aspect. So when you're looking at the funding challenge, building that initial team is really, really important to understand those timeframes, and getting people who understand that, look, there might not even be a customer conversation with any sort of meaningful output for a few years. And that can be a massive challenge too.
Got it, Xavier. Though the problem that Xavier mentions might or might not be specific to Cambridge, but as he mentioned initially, it might apply to all of us. Jatin, do you want to add to any of it?
So which point specifically, Vaishnavi?
So is there any similarity that you see, or anything differs in the Indian landscape?
No, I think Xavier pretty much covered it. I think all of that does apply here. I think additionally, I would say, again, early stage, I think up to Series A, I think there's no problem with at least the domestic funds in India. I think in deep tech, I think we have to get a bit more matured for some of the later stage funds, right? And then, you know, obviously nothing will succeed like success, just like some of the consumer companies have IPO'd recently, right? You know, I think some of that will follow. And I think whatever gaps are there in terms of the maturity for being, overcoming these barriers will also slowly get filled. Strategic M&A will start happening. I think Geo has already started some of that in India. They bought several deep tech companies in the recent past.
Thank you, Jatin. Shubham, what are your views on it?
Yeah, I think Jatin and Xavier have covered most of them. I think two additional points. I think Indian universities are buzzing with great talent, right? And Indian universities also have the additional benefit of the capital efficiency, especially in early deep tech product development. A US spin out might take $100 million to launch a product. In Indian startup can get there in 5 to 7 million, right? So there is a definite capital efficiency advantage that we get even in deep tech. But that being said, with the great talent, with the capital efficiency, Indian universities, for the most part, are unable to really support entrepreneurs early on, whether it could be in giving grants, whether in giving some endowments, using their endowments to fund a lot of the research. So I think Indian universities are lacking there, which sort of sometimes derails some of the truly path-breaking deep tech innovation. And second, to Jatin's point, apart from the lack of growth equity in the Indian deep tech ecosystem, where you need I think that 25 to 50, 60, 80, $100 million check size. I think beyond $100 million deep tech startup looks like any other startup. If you look at Cruise right now, self-driving autonomous vehicle, no one looks at it as a deep tech startup, right? It's fundamentally looked at as a business. So beyond a certain point, I think all startups will attract, but it's the growth equity phase where Indian startups sometimes sort of fall away. And that can also, that's the problem there also, is that a lot of our capital that comes into the Indian ecosystem comes from a global pool of capital. And there is no really permanent pool of capital available in the Indian ecosystem. So as Xavier mentioned, if you're backing a deep tech startup, typically 5 to 7 years at the very minimum, right? So you typically need funds that are 10, 12, 15 years, or even a permanent pool of capital for you to really support the deep tech startups through the entire life cycle. So I think that lack of capital and the support from universities are the two additional challenges, in my opinion, in the Indian ecosystem.
I was going to say, you know what, the growth capital thing is also a problem in Europe as well. I mean, the way that I've heard this described recently is that there are three ecosystems for VC. There's China, which is its own ecosystem. There's Silicon Valley, and there's the rest of the world. Maybe New York might count, but it's the rest of the world. And growth capital is a problem everywhere because it's that anything of above 50 million in the UK, a check sort of that size, it's just really hard to find in Europe at all. You have to go to Silicon Valley basically, or China. And I completely agree with your point about past that 100 million in funding stage, every company just looks like a company. It's just a business at that stage, right? Absolutely agree with those points.
Got it. So while we are at this point, let's stay on it and elaborate a little more. Jatin, I'll ask you, if the funding models needs a shake-up, then how do investors who are one of the prominent stakeholders in the ecosystem contribute to doing so, either to break the monopoly or to solve the problems that all three of you were discussing?
So I think, we are doing our bit. I know Pi is doing his bit, so our fund 2 is 6-7x of our fund 1 size, right? So earlier we were doing pre-series A, now we go all the way up to A+, even B, right? So I think, there will be some organic stuff that is going to happen, right, from the domestic venture capital side. And I think, like I said, right, during COVID and, whichever funds have raised funds recently in India or are raising, right, it's become a lot easier, right, from the Indian large business houses, the UHNIs, the large family offices. I think they're a lot more open. So you will see domestic funds, doing tech, deep tech, their fund sizes increasing progressively, right? And at a much faster rate than, it has been happening, when we started our fund 1 in 2015. And then, like I said, once there are a few more success stories, larger success stories like we are seeing in the consumer space, You see how, some of the consumer IPOs, all the world's top investors have done the pre-IPO round, right? And even prior to that, I guess, right? So I think more and more global capital will also come in this space, as well as the domestic fund sizes will also increase organically to try to fill that gap. And then in terms of the academia industry connect, right? So now India is, thanks to COVID and problems in China as well, I guess, we are formally the third largest startup VC ecosystem in the world. But, we have a long way to go in terms of the academia industry connect. As Shubham mentioned, partly the problem. The other issue is also that we need to, close the gap like it's there in the, developed world in terms of the industry academia connect. It may involve revising curriculums, and more connect. I think things have improved a lot again, right? To be fair, in the last 5-6 years, we are, as in both our funds, we are tied to the large institutions, educational institutions in India. And like I said, we also do our part, go there, evangelize, help them, in terms of commercial sense, business sense, yeah, stuff like that.
Thank you, Jatin. Thank you for that insight. So I'll ask you, Shubham, what medium or long-term changes do you see in the funding landscape coming up?
What do I see versus what I want are two different.
Let's address both. Let's address both.
Yeah. So what do I see is, to Jatin's point, I think folks raising larger funds, that's definitely true. Folks raising opportunity funds, right? Growth opportunity funds, that's a common way for existing early stage funds to support their portfolio companies and double down on their portfolio companies and pick the few chosen ones. I think opportunity funds might be another way to go about it. And I think that seems a more short to medium term doable solution. The other factor is, I think global capital will start to flow. I think I think Indian companies or global companies, whatever, like companies in general getting acquisitive in the Indian deep tech ecosystem, or even for that matter, European deep tech ecosystem, would be highly beneficial, right? Most of the deep tech, if you see, it is acquired by large companies, right? There are obviously instances. You have Aurora that's gone public. You have Rocket Labs. You have a few companies that have gone public, but for the most part, in pharma, in AI, ML, in other companies, acquisitions seem to be the primary driver, right? So I think going down that route will obviously showcase the potential from a financial viewpoint in investing in deep tech, plus open up a lot more pool of capital, right? And because eventually folks who are successful in a certain domain end up coming back and investing in the domain that they want, in the domain that they sort of are experts in. So I think that definitely could be doable. The ideal play here is that you have a permanent pool of capital, right? Like you look at Harvard endowment fund, $45-50 billion, maybe even more, with the kind of return that they've had this year. They can keep recycling that capital back. There is practically nothing of that sort in India, right? There are a couple of larger foundations supported by industrialists, but there's no professional, large-scale, permanent pool of capital that can continue to support this and is happy to sit tight for a few years or even a decade, right? And a decade doesn't really move the needle for these hallowed institutions. So I am hoping, I think IIT Delhi, my alma mater, they're trying to set up an endowment fund. I know that for a fact. Hopefully they will be successful in the next few years. And many such IITs, IIM alums who've done well globally, if we can all come together to set up this pool of capital, I think, and that would go a long way. In addition to obviously the Indian sovereign government also setting up their own global pool of capital, similar to what Singapore has done in GIC, Temasek, or Abu Dhabi. So I think that global pool of capital is maybe 5 to 10 years away, but I think that would be the holy grail, in my opinion.
Well, amen to that.
Yeah.
And Xavier, any thoughts on this? And I also wanted to hear how has COVID affected the funding momentum at your end?
Yeah, I mean, so talking about the changes and mid to long term, I think I completely agree with the point about permanent capital, and I think there is a move towards that globally at the moment. I mean, the point about opportunity funds and Tiger Global has obviously come in and completely shaken up the landscape, and we're seeing hedge funds joining, and I know they're even less permanent capital, but there is more and more interest in venture, and the reason why I think is because over the last 10 years it's the best performing asset class. I think the IRR is something around 13-14%, which is higher than anything else, and I know those are Europe numbers. And so I think there's more and more money coming into the space, a lot more family funds, and I think that's another form of permanent capital. There might not be a lot, well, I doubt there's many family funds that are on the same level as Harvard's endowment, but there's family funds who are very interested in venture, who are looking to intergenerational, wealth increases. So there is more permanent capital coming into this. There's definitely more in terms of growth capital and things and opportunity capital because of the success of Tiger. I think one of the other biggest changes is we're seeing Sequoia putting all of their capital into one fund has been a massive change in the space. And I think there's going to be a move in venture towards that kind of mentality, because it gives people more dry powder, it gives people more ability to deploy on opportunities and things in a way that they need without the sort of 10-year deployment cycles and returns and things like that. And I think a lot of this, and this comes from sort of the reason why we exist as a company, as a builder and stuff, is because there's been a lot of great innovation over the last 20 years in consumer tech and consumer things, like there's the Ubers, the Airbnbs of the world, and then you've got Rocket Internet in Germany, who exploited this and massively created all of these consumer-based brands. But the low-hanging fruit, the sort of opportunities there are starting to dry up. I mean, there hasn't been many massive exits and IPOs or SPACs or anything in that space over the last couple of years. There's been a few, but not massively. Most of the big exits that we're seeing in Europe and America, I don't know the Indian market too well, have been around deep techs, have been around fundamental technologies, especially in things like electric vehicles. And I think that's been a massive change too. So there's a lot of interest in the deep tech space. And I think the limited partners, the investors into funds, have seen that actually if we structure our capital where we're investing in these fundamental things, we're going to do a lot better than we're looking at the traditional 5 to 7 year exit sort of landscape. So I think that's a massive point. In terms of the question about COVID, honestly, it slowed down for about 6 weeks in 2020. No deals were done. Funds were like, right, we need to just deploy on our own capital, deploy into our own portfolio. Let's focus on what we've already got and not look for new deals. That lasted for 6, maybe 8, maybe 10 weeks. And then after that, it was deploy. And that has rapidly changed. Funding has, and I don't have any sort of key metrics on what the numbers actually are on this, but it has definitely increased over the last 6 months, 12 months even. There's been lots of deals being done. The amounts for those deals has definitely increased. I'm not sure if that's just COVID. I think that might just be a market issue. I think the thing from COVID that has happened and is really exciting is that we're seeing companies being able to speak to VCs all over the world and deals being done on Zoom without having in-person meetings, which means the quantity of investors that an entrepreneur or founder can go and speak to has massively increased. The scopes of funds changed because they can look much further abroad. They can look at different deals that they wouldn't be normally able to do. It's not just local anymore. And I think that's a really exciting thing that COVID has changed. How long that continues after COVID, who knows? Will it be the new norm? It might be. But I think that's a really exciting part of it, is that because, for example, if you're an entrepreneur now, you can have 7 or 8 meetings in one day to do a fundraise, and you can be based anywhere in the world. A friend of mine, he's just raised a 2.5 million pre-seed round, and he did that in a week by having 50 meetings in a week. Most of the investors have come from Singapore, Bangladesh, and Indonesia, and a couple from the UK. He's based in London. It's things like that we're starting to see. It's really, really exciting.
Good point, Xavier, and thank you. Though we started off the panel with addressing the barriers, we can end on a positive note with a lot of hope, and I can see enthusiasm, and hoping that the funding leads to good solutions for the future generations, and for important sectors like electric vehicles and sustainability, and can address health tech manufacturing. So thank you so much. And it was nice having you all on the panel. Thank you.
Thank you.
Thanks very much.
Thank you, Xavier. Thanks, Jatin. Thanks, Xavier.
Likewise, glad to meet you, Shubham and Xavier.
Good to meet you both as well.